Filing taxes is a daunting task, but it doesn't have to be. And in this video, I am going to go over 3 of the most common mistakes that people make when filing their taxes and how to avoid them. And remember guys, this is for educational purposes only, it's not tax advice. So if you want advice that is specific to your situation, do consult with a CPA. Mistake number 1, not filing on time. The deadline for filing your taxes here in the US is mid-April. And if you miss that deadline, you'll get hit with fees and penalties. Now the actual date that it is supposed to be is April 15th, but this date cannot fall on a weekend or federal or DC holiday. And guess what? This year, April 15th is a Saturday, and then the next day, April 16th, is a holiday in DC called the District of Columbia's Emancipation Day. But because that falls on a Sunday, it is observed on the next Monday, April 17th, thus pushing the tax deadline all the way to Tuesday, April 18th. So that is your deadline for filing your taxes for the 2022 tax year. To avoid filing late, make sure you have all of the necessary documents and information prepared well in advance. If you're using a CPA, make sure to contact them in early January to lock in their services, or you can contact them even earlier at the end of December if you like, just to make sure that you have them and they can file your taxes in a timely manner before they get busy with the dozens of other people that they're probably doing taxes for. Mistake number 2. Not taking advantage of all available deductions and credits. There are many deductions and credits available to taxpayers, such as for charitable donations, education, childcare, or retirement account contributions. And if you're self-employed, there are even more deductions you can take advantage of, such as a 20% of qualified business income deduction, a home office deduction, or deductions for all of the things you spend money on that are essential to your business. Make sure that you research and take advantage of all that apply to you. Now, your CPA can help you, but sometimes they overlook things because they don't necessarily know the ins and outs of your business. And remember, they might be doing the tax returns of over 100 people that tax season and don't necessarily have the time to really scrutinize your business with a fine-tooth comb. So there's no harm in doing some more research yourself, checking out certain deductions, and then asking your CPA if you can deduct something. And you can also talk with your CPA throughout the year, i.e. not tax season, so when they're less busy, and they can tell you whether something will be deductible before you even make the purchase. But you could literally be saving yourself thousands of dollars by deducting the right things. However, if you did save thousands of dollars with those deductions, you better not make our 3rd mistake. Mistake number 3, not keeping accurate records. Make sure you keep all of your receipts, bills, and other documents related to the tax deductions that you've taken, just in case you get audited. This will make it much easier to prove that your deductions and credits are valid. Now, if you bought items on a credit card, your credit card statement can serve as proof that the purchase was made, but the IRS may still want a receipt in addition to your credit card statement to prove that the item that you bought from that store really was tax deductible. For example, let's say you spent $549 at Home Depot, but did you buy this lawnmower for your landscaping business, which is tax deductible, or did you buy this grill for your 4th of July family get-together, which most certainly isn't tax deductible? From your credit card statement, the IRS can only see the price, not what the item actually was. So certainly for large items where you definitely want the tax deduction with no hiccups, do keep your receipts. If you have a few restaurant bills or gas bills that should be tax deductible, but it's not the end of the world if you miss out on that deduction, then you could risk it with just credit card statements, but that's up to you. To be 100% safe, always keep your receipts. The good news though is that if you buy something online, or if you first order it online and then pick up at the store, or you just buy something from a store that you have an account with, there should be a receipt in your online account or just sitting in your email. So you don't necessarily need to make a conscious effort of getting the receipt, the physical paper receipt, and keeping it for items that you've bought online. Now, you should be keeping these records for at least 3 years from when you filed your taxes, and possibly longer in some situations. Again, consult with your CPA on how long you have to keep the records for. Now, in just a moment, I'm going to give you one more bonus mistake that surprisingly a lot of people make. But first, if doing your taxes is getting you down and you want some free money to cheer yourself up, you can currently get up to 12 free stocks for opening an account and making a valid deposit with the brokerage app Webull. You get 2 free stocks for just opening an account, and those stocks are worth between $3 and $300. Then, if you deposit $100 in your account, you get between 4 and 10 more free stocks worth between $7,000 and $3,000. It's the luck of the draw, what you get, and obviously that $100 that you deposit remains yours. You can use it to buy stocks, ETFs, cryptos, whatever you want. Webull, of course, is the fantastic commission-free stock brokerage with charts and tools that are better than the closest competition. Link below if you're interested. Now, this is my final bonus mistake for you guys that a surprising number of people make, and that is forgetting to sign your returns. Now, this is less likely to happen if you use a CPA, or especially if you file electronically, because it won't let you file unless you've signed. But if you are submitting paper returns on your own, it's really easy to overlook signing them. I've forgotten to sign them in the past and it's caused delays. I've also got the last digit of my EIN on my business return wrong, and the IRS sent back the returns with sort of a red marker circling it, telling me to update it myself, kind of like a teacher correcting your homework. It was kind of funny. But anyway, it did bring about a little bit of a delay. So do make sure that your returns are signed and all your information is correct. And I wish you a successful tax season. Please subscribe to the channel if you're new and you want to see more videos like this. And don't forget, you can get up to 12 free stocks from Webull. Link for that deal is below. We'll see you next time. Bye-bye.